What are three tips that you might have for the investor that's trying to see through what we've been hearing described as an economic hurricane in some cases, or just more broadly, a storm, and with a mix of factors that a range of CEOs are discussing and trying to themselves see through as well?
I would always say, don't fight the Fed. That was a phrase coined by my first boss and mentor in this business, the late great Marty Zweig. I think maybe in this environment, it's really important to heed that message. I also think that investors need to expect more volatility. And I'm not just talking about stock market volatility. I think the end of the great moderation era is very much here. I think the era we're in now in a secular way looks entirely different than that 20 plus year period of great moderation. And that's because gone are the days of cheap access to goods, cheap access to energy, cheap access to labor. I think all three of those ships have sailed, and I would therefore expect greater inflation volatility, economic volatility, probably geopolitical volatility. We're in this era of regionalization and demographic shifts that are pretty painful. That's not without opportunities, but just understand it's in the context of more macro volatility. And then, of course, with the return of the risk-free rate, it's brought, I think, secular changes, including the fact that fundamentals are reattaching to prices. It helps explain why equal weight has been generally doing better than cap weighted, why active has been generally doing better than passive, or at least on a more level playing field with passive. And I think those are secular and important as backdrops for investors to think about.
Charles Schwab's Chief Investment Strategist, Liz Ann Saunders, as always, thank you so much for the time and the insights. Really appreciate it.